up, everybody? Welcome back to Royal Blu FX. In today's video, we're going to take it a little differently, okay? Rather than the original way of doing the videos, we're going to talk about something different, which is I'm going to be doing an analysis on about 4 to 5 currency pairs on this video currently. And the reason why I want to do this is so I can give back to you guys on this holiday season. And that way you guys can also take some trades depending on the setups that I give you. And if you guys haven't already, go ahead now, right now, to RoyalBluFX.com to go and purchase your course, because right now it's at its lowest as it is right now at $249, and it's going to be going up after the holidays. Let's go. As promised, I will do 4 analysis on 4 different currencies and indexes right now. So we're going to start with GBP USD right over here, okay? So normally I start on the 30-minute time frame, and that's only because the theory goes like this. Because I'm trading, I'm an intraday trader, I'm not a long-term trader. I just start on the 30-minute, and we know that the sessions don't run that far. So if I toggle this on, you'll see here, for example, here is the London session, right? The green is the London session. So we know that, right? We're not going to wait for price to get here eventually to trade. I mean, eventually we'll wait for price to get here to trade, obviously, but and that's long-term trading. But since we're intraday trading, we're just wanting to know where that next move is going to be impulsively moving, either to the upside or downside, right? So let's start on a 30-minute. I'm going to get rid of this here. All right, the session's here. Okay, and we're going to go straight on the daily time. Oh, excuse me, not the daily time frame. Excuse me. Let's go down on the 30. Okay. So if you were to ask me where the next impulsive move is going, we will see a 30-minute time frame, right? We see that price is bullish, so we know eventually price needs to come down here. So this would be the demand zone. Okay, and then we can already see that price is this low here, did not break above the high, so therefore there is a supply zone in this area here, which created for us, and then we're expecting for prices to go bearish, which they have over here, obviously, on the 30-minute. Now, if I get closer, I like to go on the 1-minute time frame to look for the entry. So when price opens up, price is going to run in one of those directions, either supply or demand, or sometimes supply and demand may contradict itself, meaning that price can go either supply or demand when price opens up, and that's price contradicting itself. So I would rather wait either for supply to fail or demand to fail, and then take the next action or the next entry after price has failed. So in this example here, we have price. Let me see, price bounce to this demand zone here. We obviously can see that we had some supply here, right over there. So we had a supply to demand. Right, this is our supply to demand, right? And here's price now in our demand zone, right? So we could actually go jump down on the 1-minute time frame. Okay, once we do this, to be exact, this is the order block here, to be exact, right there. Okay, I normally like to split my risk about 50-50. Okay, right there, and we can already see that price actually has gone inside the zone. So if I toggle this line chart, you can see that this was just a wick, right, that tapped and mitigated the zone. However, now we have the full the market coming into the zone here, right? So now we see that price has been bearish for some time. Okay, we see that price actually tapped the supply zone here, and it's still going bearish. So if you ask me, the next entry would be here, right there. Okay, so if price opens up, I can also see a buy. Now here is where this is where supply and demand contradicts itself. Okay, let me just explain here quickly. So right over here, you'll see that supply, there was some supply that fell over like this, right? And then price ran bullish, right? Which means this is a sell to buy move, which means there's a high chance that price will have to break bullish here, and the only reason why is because we had a failed supply zone, right? The supply here was supposed to run to the low side here and break this low. However, it flipped, and now price has come here to this demand zone, and now we're anticipating for prices to rise higher. So the conflict between the supply and demand is this area here, which is our consolidation period, right? So What I'm actually anticipating here isn't for prices to actually run bearish here anymore. What I'm actually anticipating is for price to run bullish. What I want for price to do here is right there. You can see that internal supply zone, right there. This internal supply zone right there. So what I want for price to do is it rejected the supply zone. I want another fail for price to start running like this. If it starts running bullish, then I'm waiting for price to come back to my flip zone here, and then I'm going to look for price to go bullish here. Okay, so my anticipation is that for this gold, excuse me, for GBP USD analysis. So I want for a rejection, which the rejection has happened, and if price flips over like this, I want price to come here to the demand zone and for price to go bullish. Okay, and so we would enter right in here, right, for this last candle like this, and then we will look to target the nearest high, which is here. That would be our nearest high, right? So that would be, at minimum, we would target this high, right? But you can also hold this all the way up here, okay, right to let me get that. Let me get the this tool here. So you would hold it right at 1.27444. Okay, that's where the target would be met. However, we have as the first target, right? 1.27106. That's your first target, right? At minimum, you need to target this high. The secondary high is this right over here at the very high, right? And the reason for that is because this is a sell. This is a sell to buy, which means price is weak here. Which means, excuse me, this is strong. The demand zone here is strong. Supply is weak, which means we need to be looking for buys, right? So this is the whole analysis on GBP USD when price opens on Monday. Okay, so make sure you copy this and look to see if I'm correct on this analysis. Guys, I'm back. My computer was running out of battery, so I had to go and recharge and come back. All right, so now we have. Let's go to Euro USD right here, actually. All right, so I'm going to do the analysis for Euro USD right over here. I started on the 30-minute, okay, and we see that we had some supply. Okay, there's your sell to buy here. This is your weak supply because the supply did not break the low. All right, and this is where we're going to look for buys on long term. So I'm going to mark this as a demand zone here. Okay, and right here we can also see that we had some supply as well. Failure of supply right there. Right, and I put that there just to identify that is my last supply zone. Right, and it must have bounced off another supply somewhere. Actually, I see it right there, right here. Okay, so there's your supply, right? And there's more supply there, right? And so now I'm going to go down to the 3-minute right there. I'm going to redo everything again, just like I did on the higher time frame. I'm going to do it on the lower time frame. I see that there is demand here, right there. Okay, so what I'm anticipating is if I click this line chart right there, you can see that price didn't actually tap this demand zone. So I'm actually anticipating for a buys here as well. I'm anticipating the price will come down here again for prices to go higher. Or price may have just tapped the zone already, swept this liquidity, this inducement right here, right? And now we see what there's a failure of supply, which hasn't broken this low, and prices are flipping bullish now. So what I will see here, I can still wait for a long-term buy here, right on this demand zone, just like that. So I can wait, right? Or I can take action when price opens. Today is Sunday, right? Tomorrow, Monday, or actually Sunday. Today is the holiday, which is the 24th of December. So maybe not the 25th because it's Christmas and all banks are closed, right? Whenever price opens up, it's going to open up either here to this supply zone right there. So let me just let me move this over here. Okay, right over here. All right, so this is what you can anticipate. You can anticipate for price to come up here for the sell, because we can anticipate that this demand zone didn't really actually tap this demand zone, right? So that what we're anticipating is for price to come up here, sweep the liquidity, mitigate the supply zone, right, and then run bearish like this. Price can obviously do a lot of many other things. It could also just fail and start going bearish. If it does, then we understand that we had supply here, right? And this is the next demand zone right here. So we can also anticipate for prices to run up here. So there's three things actually. Let me just explain here. You can anticipate for prices to run up bullish and then bearish, or you can anticipate for prices to go bearish here and then bullish. Okay, and then prices could fail, maybe come back down to the demand zone and then run bullish like this. Okay, or prices can actually, yeah, that was it. Excuse me, that was it. Oops, excuse me. Okay, that's what you can anticipate. Okay, so we can look for a sell on the supply zone or a buy on this demand zone. Now, if price gets back to this demand zone, you need for price to recorrect, okay, for correction. You need, again, for supply to fail in order for demand to take over. You know, if you have something like this, right, you need for supply to fail, like this, supply failing, and then demand to take over for the buy, just like this, okay? So that's my analysis for this. Of course, we can also pay attention to this area down here. If this demand fails, okay, because we're already in the premium and this is the discount, price can also fail here, which means we can also anticipate a sell to go all the way bearish as well here. Let me just back it up. So if price taps this supply zone here where we are, right, price can go down, maybe come back again, right, and then a sell off. I can anticipate maybe a sell here, something like this, where price goes up, runs up, comes back down, fails for the supply, fails demand, and then price coming here for the long run like this, okay? So I do anticipate for prices to also do this, okay? So if you want, guys, go ahead and copy this chart here. You can see it. Let's go down on the 30 minute, up in the 30 minute, just so you can see something like this, okay? So you can see it well and clear over here, right? We have a failed supply that turned into demand. Price did not mitigate. So this is where we're looking to buy long term on a 30 minute. You can also look at down on the 1 minute or 3 minute, depending on what you like, right? Supply, right? High failed to break the low. Price comes up, sells, right? And then we have a demand here where we have the supply fail to break the demand. So we have a demand zone for a buy here, okay? Something like that, just like that, okay? So go ahead and look at my analysis, and then obviously go ahead and mark it out on your charts as well, for to have some clear understanding on how we, if we're correct, obviously. Okay, this is all my analysis on my chart, but let me just go back here. So now we're on US 30. There's a huge supply zone here. Okay, this is a breaker block right there. So that's our supply. If we go zoom out a little bit, you can see price just ran so fast. So okay, taking out all this liquidity, and we have a steady bullish momentum pushing bullish. Okay, so we have supply in here. You can clearly see where supply took place, demand took place in here, right? And then here's our next demand zone here, right there. So that's the 30 minute. So it looks like price actually mitigated this demand zone here, and now what we're anticipating is for prices to actually start rising higher, because, and the reason why I say we're anticipating for prices to rise higher here is because we only had one break of structure, right? Just one break of structure, or a chalk, if you will, doesn't identify that prices should move bearish, right? Just one break doesn't mean that prices are going to go bearish. Okay, we need multiple breaks of structures in order to identify that price is going to go bearish. However, we are really high on the 4 hour. If you look at the 4 hour, right, the actual demand started here, right, and we are all the way here in premium. So it obviously does give us some sort of identification that price can actually move bearish here as well. We could start seeing prices start falling in here, but if we're just intraday trading, I will tell you this: we've hit a supply zone here. Okay, and then we are in the premium from this discount to premium right over here. We are on the premium, which means there is a likely chance that price could fail here, right? It could fail going bearish like this, and if it does, we anticipate for this to be the next supply right here. Let me just take this out right here, just like this. So if this low starts running now, this is my next supply for the sell, and it should be we should be selling at minimum at this low on a 30 minute, right? We're not going to hold this all the way down there because there's no knowledge right now, or no other clear identification that price is going to go any lower. So far I see that this low here bounced off of this demand zone. Excuse me, it was this demand zone. What am I talking about? Right here. Okay, notice how this demand here just tapped the surface of this demand zone, and then right here we just had this low here close in on this demand zone. So what I'm anticipating again is something like this, where we have a failure, price runs back at the supply, and then we're going to see price tap in this low. Now hold on a second, I have an airplane coming up. Okay, so that's the first move, right? That's one of my anticipations. The second anticipation is that price actually does move bullish, and the way we're going to be looking at this is going on the lower time frames. Let's go down to the 1 minute. Okay, right here. So the way we can also see this is where you see there's supply right here that reacted to other previous supply right there, right? And then we actually see demand running bullish here. This is actually an area where price can run bullish right here. So we can also see price actually going bullish, just like this. And if it's going bullish, right, it's going to target the supply zone right there. So this is, at minimum, you're looking to target the supply zone right here at minimum. Okay, otherwise prices can show us a reaction and then continue bullish. So that's what we're looking at. So you have the first TP here, the supply zone, then you have the second supply zone as TP right up here, the current high, right? Because we haven't actually broken this low right here, but we do have some supply here that is in the way. The price could most likely, interact with, obviously, and could show us a sign of bearishness, right? To take price even lower, like this. Okay, so keep that in mind. Okay, so that's my analysis for US 30 right here. Okay, guys, so make sure you copy this and then quote me on this, obviously, just like this. Okay, so I hope this makes a lot of sense on US 30. Okay, let's go to gold. This will be our last one. I'm on the replay here. I was actually showing my grandpa the analysis here. Let me move this here and let me exit out of replay. Okay, a good sign is my grandpa asked me if he wanted to invest, and I said, well, if you're okay to risk your money and okay for the losses that that can occur in the markets, then sure, no problem. Okay, so here we go. So what we have here is we're on 30-minute. We see that there was a bunch of supply right here that took place. There's your sell. There's another sell, right? So we had this supply mitigate this low here. So this was mitigated right there. Right there, okay? So if you ask me on a 30-minute, let's actually even go on the 4-hour just to kind of get a more of a eagle-eye, a bird's view or an eagle-eye view of what's happening. We can also see in this area that we do have more supply right there. So there is a nice sign for a reaction. Price doesn't always have to mitigate, right? Price doesn't always have to come to the lows here, to the sell to buy, right? This area here. It doesn't always have to do that. It could just start running from here going bullish. So I'm anticipating for price to actually run down here on the 4-hour or the 30-minute, depending on where you want to look at. We're on a 30-minute here. Okay, so we're in the supply zone. I want for price to get here to do this, right? That's number one. Number two, we can also see that there's more supply here, okay, and then there is a demand level here, which means we can wait for a confirmation here for price to run up bullish, right? We need to be careful to understand that we are in the premium. This is the discount here, right? So if you span that across, you want for price to go below the 50 EQ, obviously, just like that. You would take your crosshairs, or not crosshairs, excuse me, your Fibonacci's, right? Wait for the price to get below the 50, obviously, right? Just like that. Okay, so let me just make this clear. You could put another demand zone here, and then you could easily wait for prices to cut. It's already tapped. It's about to tap this demand zone, right? We're going to look for some recorrection, some confirmation here before prices take off, and that's where I would look to trade the next entry. Okay. let's see, did I cover all that? Let's go down, let's go on the 40, on the 1 hour, excuse me, just like that. Okay, so this is what I'm looking for long term on the 30 minute. I was on the 30 minute. I just scaled up to the 1 hour right now. Okay, so we can either look for buys here or here, bullish. The next one, we'd go all the way down to the 3 minute or 1 minute, and we'd enter on the sort of like the 5 seconds, right? We see here we have more supply here, so we have, this is another option right here. And when price opens up, when the markets open up, it either runs to supply or demand right away, and then it turns the other way, right? So we could also see on the 3 minute in as a higher time frame, okay, and scale down to the 5 seconds to enter. We could see this price tap the supply, and then hit this demand zone, and this is where I would target the last trade. Okay, excuse me. At minimum, you should be targeting this low, because there's your last supply. There's your supply there, right? So you could look to sell here on a 3 minute. I probably wouldn't go any lower than this, obviously. Oops, excuse me. Yeah, so that's my analysis on this, guys. Make sure to copy this right now as you see all this, right? That's your supply. Price can come here to the supply, go bearish here, right? But overall, what I'm looking for is the long term, obviously. This would be the long term. I would look for confirmation in here, right? Because price would respect this demand zone. We would see price flip here, and then we could look to enter sort of, obviously there. My favorite entries are flips. If you guys aren't familiar with the flips yet, okay, it's really simply just this. Price is going bearish, right? And if price is going bullish, we see price flipping like this, and then your entry is right here, right? That would be your entry. Okay, guys, so I hope you guys learned and enjoyed my analysis. Keep this in the books, obviously, and copy everything that I showed you guys here. Until then, guys, I have to run. I will see you in the next.